Welcome to Ecn Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Currently the Australian dollar holds steady in the Friday session, marking its third day of subdued trading after Chinese latest PMI readings offered mixed signals. Following that, also the Australian dollar was struggling after the Trump and the Chinese president meeting delivered fewer breakthroughs than hoped. Trump announced tariffs on China will be trimmed by 47% from 57%, and the rare earth export dispute has been resolved but acknowledged that key issues still remain. This week we saw the Fed cut rates by 25 basis points to 3.75 to 4%, but the surprise came after Powell's hawkish message that a December rate cut is far from certain, which helped support the US dollar. Looking at the technicals, we can see that since the pullback, they are still somewhat heavy, so we could see a further slide towards 65.45 to around 64.90 before a bounce. Reassess from that point if challenged, just in case we get a slight extension on to 64.40. Turning to the euro, that was also heavy, as we can now view the support level being slightly weighed on at 115.60. A break there may give further scope down towards the region around 115.25, but let's see if the market can rebound from this region and look back towards 116. Overall, though, the technicals are heavy. The dollar yen broke above 153 in surges, but still I anticipate that there could be a little bit of bearishness back in the market soon, given the fact there is bearish divergence from the RSI and a very weak MACD. If so, then a break of 152.75 now would be supported for a further slide down to 149.5. I still expect to see any upside attempts that could trigger a bull trap, so still be on your guard in case we do witness that. Sterling posts a 6-month low, but still finding support around the August level of 2025, and therefore, like previously, found demand, and we could actually see a bounce, and if so, look back towards the 134 area as a broader call. Finishing up with commodities, the market finding good support of that 3,888 to 3,900 level, and from this Maribuza candle, could see further rally now that we're touching the 4,000 area and look up towards 4,030. A break there would give further scope on towards 4,100. And oil still wavers around this $59.5 to $60 a barrel. Keeping an eye on the technicals, they are a little bit to the weaker side, but I still feel there is bullishness to come and maybe see a retest around that 61.5 to 62. Well, that's a wrap. Thank you for joining me. And as always, look out for the intraday report, and I hope you enjoy the great start to the new weekend.